Hi, this is Zak Mir with the Bulletin Board Heroes for Friday, the 21st of December, here on Share Talk. Starting off with the Allied Mines, and you can see that the shares consolidated well after that vertical move through the 50-day moving average, found support at the 50-day line around 60 pence over the last few sessions, and end of day close above this December resistance line nominally at 68 pence. Could be enough to get us at least a retest of the 80 to 85 pence zone, which has been post-August resistance. Obviously, end of day close back below 60 pence cancels that idea for now. Next up is Afritin, which is looking interesting at the moment on the basis, I suppose, of the rising 50 and 200-day moving averages that we've got there at the moment. Obviously, there's not much on the chart here to go by, but on a longer view, one can say that while we're above the 200-day line at 3.12 pence and at least above 3 pence, which is December support, got a best case scenario target of 5 pence over the next couple of months. On to Earthport, which I looked at a while before, seems to be making some progress in breaking out of this extended wedge that there's been on the daily chart since August last year. A nice dance along the 50-day moving average at 7.16 over the last week or two, and especially while we're above that 50-day line, looking for the stock to fill the gap towards 10 pence early in the new year. Kefi is up next, and here we can see that there's been the attempt to break out of the falling wedge from May. I suppose it tested the top line there of the wedge and then bounced back as well, which is healthy. As long as we close above or have a weekly close above the 50-day moving average today, we are still looking towards the 2.25 pence resistance zone marked by the 200-day moving average over the next month or two. Finishing off with San Leon, and here we've got potential wedge breakout there. Obviously, we've got to see whether the stock can break out of this. Well, I suppose it's actually a triangle rather than a wedge, but break through 27 pence, which would then take the stock, hopefully, or lead it up towards the 34 to 36 area over the course of the early new year. Stop loss, obviously, at the moment, back below the 23 pence level, which is the June support line. That's it from me, and have a Merry Christmas.